Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar bulls attempted to add new gains above the 70-cent handle on Friday. As you can see, the market took the challenge there briefly. However, after Friday's challenge and with Monday, the market shifted its sentiment back to a bearish stance. And with the bulls leaving the door, the exit door that is, sharply, the market plummeted away from that 70-cent handle and posted a fresh low of 69.56. It is ascertained that the market will pressure the downside still, with the target holding at 68 cents, with the immediate target seen at 69.35. Any advances, I do believe, will fail, and especially with the 60-day moving average seen above around the 70.28 mark, quite close to where this resistance is, around figure 25. The market is a little bit mixed now when it comes to the US dollar. After Friday non-farm payroll release, the market missed its forecast of 180,000 and instead slipped to 75,000, even as the unemployment rate remains at 3.6, in line with the forecast and the lowest since December 1969. The decline now was the second in 4 months that the payrolls increased by less than 100,000, therefore showing that the labour market continues to show signs of weakness. In addition to the weak total for May, the previous 2 months' reports substantially downwards revised. So March count fell from 189 to 153, and the April total was taken down from 224 from 263,000, and a total reduction now at 75,000 jobs. Now that we've resumed after the Queen's birthday and been absent on Monday, the market now looks for the dollar index to challenge the level, which comes in at 96.40. A break beneath there would give further scope down towards 95.40. This in turns will see the euro rally on and look towards a resistance at 113.1890. The dollar yen still remains reluctant to go through the level of 107.8595, and while remaining above there, does show some threat that the indicators between the two are marrying up. Now, a break above 107.7095 could give us a next move up towards the region of 109. So do keep an eye on this level. Any pullback should find support around 107.85 to 95. Sterling still struggling to get through that level of 127.60, and as you can see from the rejection from quite a few number of times, does give some threat that we may be turning back to the downside of 126.50 support. However, what supported this move in the first place was bullish divergence, and the break and also the marriage of the two indicators, the RSI and the MACD, gave us enough momentum to look to the top side, but it cannot break the level of 127.60. Let's see how we play out. If we get a weaker US dollar, then this may give us some gain and put us in a prime position for the bullish move. But as I mentioned before, it's looking a little bit weak, as from the close of New York tomorrow morning would give further downside risk. As you can see, if we close this picture in, that the gold has taken a rejection from the level of 1,343 back in February. From this rejection and also this rejection here, the market is now looking back towards the recent objective, which comes in at 1,324. A break beneath there would give further scope to the downside, and it may even see a drop back towards the region of 1,300. So do keep your stop losses accordingly. While 24 is intact, we could see another test to the upside. Wrapping up with oil, the market's still holding to its gains since rebounding off the low 50. However, still a lot of work to do to the top side, and therefore would see a move towards 54.80. Now, a break beneath above there will give further scope up towards $55 to $56 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this new day.